Is Verizon and its 6% plus dividend safe? Is that a good option for dividend investors? This is the focus of this video. Looking first and foremost at the Verizon stock, which is available with ticker symbol VZ as a communication sector business. It has its dividend yield at one of the highest level that we've seen in the past several years, currently at 6.35%. Just incredibly high dividend yield, which is way higher than their own 5-year average. Based on the data from Simply Safe Dividends, it does have a safe dividend. In fact, it has a dividend safety score of 87, marking it a very safe dividend payer. What's more, recently Verizon announced an increase to its dividend just in September of 2022, whereby they increased their dividend by 2%. On top of that, it's worthwhile mentioning that dividend for the Verizon has been consistent and in the past 31 years, the fact that they've been paying their dividend uninterrupted for that time frame. On top of that, within those 31 years, they have been increasing their dividends for the past 15 years, year after year. So they have a streak of 15 years of dividend payment increase. Looking at the last trading price of Verizon, which was at $41.10, it is hovering a lot closer to its 52-week low price. In fact, at the time I'm making this video today, Verizon closed at its lowest price in the past 1 year. The highest price that this stock has had in the past 1 year was at $55.11. While this might be quite disappointing in investors that are seeking some sort of appreciation in the value of the stock, it is worthwhile mentioning that Verizon might be probably a better play for dividend income and not so much necessarily for its appreciation. Although there are some arguments and research done that in the past, whenever the stock has hit such low price range, it's kind of recovered from it fairly quickly. And that's why you don't typically see such a high dividend yield from this stock. It might be a good opportunity for investors who want to lock in potentially this dividend yield for a longer term play. That's something for you to consider. On top of that, if you look at the forward price to earnings ratio, which is a measure of how the investors are assessing this stock and how much premium are they willing to pay for it, it is at one of the lowest levels in the past 5 years. In fact, if you look at the past 5-year average, it's sitting at 11.6, and currently the forward price to earnings ratio is 8, is almost at the lowest level that we've seen for the stock in the past 5 years, and it's at way lower levels than even the communication sector. All of which pointing out to the fact that the stock appears to be well undervalued at this time. We're going to take a look at the number of additional metrics. But for the time being, I just want to point out that Verizon does pay its dividend quarterly. It's paid in the months of February, May, August, and November. And it has an annual payout of a total of $2.61. If we look at some additional financial measures here, the first one we are always interested in is the earnings per share. Ideally, we would like the company to have this earnings per share gradually and consistently grown year after year. It's not exactly the case for Verizon. While overall the trend is upwards, there are some cyclicality in the years that they have not done as well, but they've recovered since then. With the last 12 months, they showed $5.38 in earnings per share. But the next 12 months, it's going to be more modest, expected to be at $5.11. Looking at their total sales or revenue, similarly, we would like to see this consistent upward trend. We are showing in 2021, the business had $134 billion in total sales, and in the last 12 months, again showing $134 billion. Next, we'd like to look at the number of outstanding shares. With many companies, as they buy back some of their shares, that tends to create more value and increase the ownership stake of the investors. In this case, Verizon has been issuing more shares. So a little bit of that red flag, and not the best case scenario we would like to see here. But currently, they are showing 4.18 billion outstanding shares in the last 12 months, which is almost about 1.5 times that of what we were seeing about 10 years ago. And lastly, if you look at the return on equity, which measures how many dollars of profit a company earns for every dollar shareholders have invested, for the telecoms ideally would like to see this number above 11%. And in all of the past 10 years, Verizon has been able to hit that threshold. In fact, in the last 12 months, they're showing a return on equity of 26%, which is way better than the threshold of 11%. Next, we're going to be taking a look at a number of additional websites and analysis to see where things are at. First, we're going to take a look at Seeking Alpha. And for this, we are accessing our premium account that we have with Seeking Alpha. There are some referral links if you're interested to check this service out and subscribe to Seeking Alpha Premium. We would provide that link for your reference, and it allows you some discounted access to Seeking Alpha premium services. Here, first and foremost, we're going to take a look at the past stock price returns. And I'll prepare you for that. It's not the greatest return. In fact, for the most part, you're seeing the negative returns. Nonetheless, as I pointed out earlier on the call, here, maybe Verizon is not necessarily more of a play on appreciation of the stock value or growth, and rather more so on a reliable dividend income with their history of 31 years of dividend payment uninterrupted. In the past 1 year, the stock is down heavy by almost 25%. And times like this could provide opportunity for investors who believe that the stock might have bottomed, or at least has its way to come back at some point. If you look at the past 5 years, again, the graph is shown here. The stock in the past 5 years shows to be down by about 11%. And in the past 10 years, they are down by cumulative 7.7, almost 8%. If you look at the maximum time horizon, this goes back as far as the past 30 years. The stock is showing to be down by close to 6.5%. All of these time horizons that we looked at, the stock was showing a negative return, but this does not take into account your dividend income that you would have collected from the stock. The next thing we are going to look at is the quant rating, and this is measure that is offered through the service of Seeking Alpha Premium, and tells you what's the assessment and whether the stock is a buy, hold, or sell. And here, with the score of 3.4, it's hovering very close to that buy rating. Based on quant rating, is showing to be a hold. However, based on the authors on Seeking Alpha, they have more of a perspective of towards more of a leaning towards the buy with 3.55 score there. That said, if you look at with the quant rating different factor grades here, we're going to take a look at things such as first valuation, which is has a score of B, with the growth. Not surprisingly, they are showing a D minus because the stock, clearly based on the past performance of it, is not considered to be much of a growth play here. From a profitability, they are showing a very positive A plus. From a stock price momentum, they're showing a C, and from a stock revisions, they're showing a C minus. And that's the trend you're seeing. Next, we're going to take a look at two sample articles on Seeking Alpha for authors that have assessed and analyzed this stock. And they have the kind of differing perspectives. This first author that we're looking at it is an article published in late August. They have more of a kind of silent perspective, more of a little bit of a skeptical approach to Verizon, with them questioning whether the high yield that Verizon currently has, whether it's worth the risk. They point out to the fact that Verizon has recently hovered, or in fact hit actually the most recently this 5-year low. They had a disappointing Q2 report, as well as the very weak second quarter of 2022 guidance. That all kind of had a blow on the stock. On top of that, there remains high risk of Verizon having a lot of volatility in the upcoming near future, which investors should be worried and kind of take that into account pretty much. There are another article here. This was a little bit more recent, and whereby it has more of a positive outlook towards Verizon, where the author has a buy rating on the stock. As you pointed out here, they're talking about that in the past 12 years since the company dividend yield has been, we haven't seen the company's dividend yield this high. So it's one of those rare moments, in other words, for dividend investors that they can take advantage of. On top of that, they're pointing out that whenever the company has touched such low prices for the stock, it has sharply recovered and increased afterwards over the past 10 years. They also point out, based on the article authors, that they expect that the dividend would continue to grow more slowly in the future. And as we saw overall, the trend overall is slow, very slow. But that dividend consistency is there, and has been there, at least judging by the past of this business and how it's turned out. We are going to take a look at now the dividend yield, the graph. As you notice, I'm showing you the past 10 years, pointing out that pretty much this is the highest level that you've seen for the dividend yield for the stock. Really something for you to consider. If you look at the past 10 years as well, and we're looking at the yield on cost, let's say at this point in time, if you get the stock, you're getting that 6.2 or 3 almost dividend yield. Whereas if you bought the stock, let's say at the past 3 years, at the time, based on the average price that you've got it there, compared to now, you would have had a yield on cost of 4%. So in other words, almost no time in the past 10 years, you've got this such a high dividend yield, almost like a perfect time from a dividend yield perspective alone, at least, to assess that it could be excellent for dividend investors. The average yield for different years are also shown. As you notice, the average yield hovers closer to that 4.5% or so. The maximum yield is also pointed out. If you notice, the maximum yield in none of the past 10 years has ever hit that high. The lowest minimum yield is also pointed out here. You're seeing the yield for the stock in the years has gone as low as close to 3.79%. That's been the lowest that we've seen here in 2013, as an example. Well, we are not recommending necessarily buying the stock or selling it or shorting it or any other for that matter. Obviously, we're trying to assess the stock based on the financial metrics that we see and provide some sort of insights on our assessment of it. It's really up to you as an investor or as a trader to potentially get this information and then do your own research, and then based on that decide. I, for one, have some shares of Verizon, not that many necessarily, but I do have it and I have hold it, despite the fact that the stocks has dropped. Really trying to maintain it for that reliable dividend income. I might personally consider adding to my shares of Verizon to take advantage of the higher yield, and then take advantage of the dollar cost averaging to bring my average cost down as well. We're going to take a look at the assessment of the stock price target by TipRanks first. Here, the analysts on TipRanks, there are 17 of them covering the stock. They currently have an average price target of $52.15 for the 1 year, with analysts having the lowest price target of 41, which we know the stock was already at, and the highest price target of $68 for the 1 year time frame. Overall, these analysts, 3 of them have a buy rating, 1 of them have a sell rating, and 13 of them have a hold rating. And lastly, we're going to take a look at the Simply Wall Street data, whereby it uses its own algorithm to calculate the fair valuation for the stock. And it is based on the future cash flow, and this estimate actually uses a discounted cash flow model to assess that. Based on that, Simply Wall Street believes that the fair valuation for the stock is at $180.66, and they consider the stock to be well undervalued by over 75%. All of that information, we hope that provides you some better indication of where things are at and how the stock is considered and assessed by different analysts, by different financial metrics, and by different benchmarks that we could use to assess the stock and how it's doing. I hope you found this video beneficial and you gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks, and crypto. We also talk about ways to reach financial freedom. With that, my name is Mo, and I hope to see you next time on our channel, Momentum Finance.